Welcome to Trading Tricks for Indices YouTube channel. This video is about position sizing. Position sizing is an important concept that if you don't understand what is position sizing, you are not going to be profitable in the day trading, because there are trades like highly probable trades and low probable trades. That is, if you are going to take a trade that has high probability, means when you enter a trade there is no obstacle between you and your target in the chart. That is called high probability trades. When you see low probability trades, when you enter somewhere in Nifty and you have encountered a resistance just above your entry, or 10 or 20 points above your entry, then it is going to be a low probability trade. Okay, I will show you how high probability and low probability trades looks like. This is today's chart, and if you see here, this is a bullish candle here, and my pre-market analysis says that if at all the price stays above this green line and made a bullish candle, I can go long here. And once I go long here after the close of this candle, the price came till my stop loss and triggers my stop loss and move against my direction. This is because when I enter here, this small red line is called, this area is called virgin CPR, which is a strong resistance here. So resistance in the sense sellers have present here and push the price down here and triggers my stop loss, which leads to a big move because the first 5-minute candle low got broken at the same time. Okay, this is called the low probability trade. Imagine this, if we don't have this virgin CPR here and this weekly CPR just above the entry candle, there is higher chances that the price could go like this and reach this next pivot. And again imagine this, if you don't know about the virgin CPR and the weekly CPR, what happens? Your stop loss triggers. So you have to learn a system where you have to enter at that system with no obstacles above your entry or below your entry in case you are short in the indice. Okay, this is called low probability trade. For example, I will show you something like this. At the same time, if you see, these both charts are from 23rd November 2022. You see here, this is 23rd November 2022 and 23rd November 2022, where if you see, the first 5-minute candle is a big red candle and the second candle is a bullish pin bar, where if you compare this in Nifty also, this is a pin bar but not a bullish pin bar, it's a bearish pin bar, but it considers as bullish because this wicks denotes that there are buyers present over here and the buyers take the price till here and it closes here. That means there is a chance that there are buyers taking the price in the upward direction. But if you see here, there is an obstacle here, this is called low probability trade. And if you see here, what in my system where I use this system, I learned and trained this about this system, and if I enter here, I may have chances to reach the next pivot and I will get some profits here. This is called high probability trade, where you have to judge high probability trades like this. This red candle is the all-time high in Bank Nifty, where the weekly resistance also present over here with this. This is the weekly resistance I have marked here, and you can imagine that closing above such big resistances acts as a support once it closes above it. This candle closes above it, then these two resistances acts as support, and With this support, you enter after the close of this candle and put your stop loss below this, and you can aim for next pivot. Okay, these are called high probability trades. When you don't know about the position sizing, if you enter these trades, these low probability trades with high volume, there is a higher probability that your stop loss triggers. So when you are interested to take the trade here and you felt like the movement in bank nifty could lead nifty to upward direction and you can enter here with low volume, that is called position sizing. Okay, if your lot size for every single day is 10 lots for high probability trades, this is a low probability trade where you have a gut feeling of reaching your target, and if you want to enter here, you have to trade half of your lots. That means you usually trade 10 lots with high probability, and at this case you trade with only 5 lots, which leads to less losses because this is a low probability trade. Technically, this sort of taking lot size is called position sizing. You have to apply whatever you learn in the markets from the books or some mentors, apply them to the real markets. So this is the low probability trade. If you want to enter such low probability trades because you have lots of gut feeling that the price may move upwards, and you cut down your lot size to half of your lot size. I am going to explain this concept in the video in detail. Please don't be panic about these statements. Just continue to watch this video so that at the end of the video you are going to know about what is position sizing, where you have to do position sizing, and why you have to do position sizing. The topmost answer to do position sizing is you have to control your losses in order to get profitable at the end of the month. This is the main reason to apply position sizing, because when you take trade every single trade, and low probability trades also you are taking with big lot size, which is your maximum capacity, and you are losing big amounts, your psychology of money gets hurt and you may not apply the right rules in the market. So here is position sizing. I hope you understand what is position sizing. Now the common layman's language, in the common layman's language I am telling you, position sizing is nothing but increasing or decreasing the lot size according to the situation. Okay, now if the situation demands you to take maximum lot size, you have to do it without any personal feelings, emotions in the market. Once you implement this sort of position sizing technique in your trading, you will get minimum losses and big profits. Okay, now how to do position sizing? Do the pre-market analysis. Yes, you have to do the pre-market analysis every single day. That is the main important thing you have to do every single day. Skipping pre-market analysis and waking up at 8:30 and right after waking up coming to your terminal or your laptop just to trade is like suicidal in the markets. So you have to prepare yourself before the market itself. I prefer you to prepare yourself in the day before itself. That means if you want to take the trade tomorrow, after that close of the markets, that is 3:30 p.m, give some time to refresh yourself and then come back to your terminal and do your pre-market analysis. Mark your everyday levels that is suggested by your system, and just keep this in mind that I am going to act on these levels only if at all the price comes here, otherwise I will not take any trade. This is the kind of attitude you should have to day trade. Okay, now what to do in the pre-market analysis? For that you have to learn a system like like I am using CPR pivot points. You cannot find any other indicator in my videos because I don't trade any other indicators. I just depend upon CPR, and I have trained myself to analyze the markets with the CPR pivot points, and I use 20 and 200 EMA in my charts. These are the most important analytical tactics I follow every single day. Do the pre-market analysis. As I was doing pre-market analysis with CPR pivot points, you can be a non-directional trader. You want to apply straddle or strangle, iron condor, anything like that. Do your pre-market analysis before the market opens at least, and decide your stop loss points per trade. As you have already did your pre-market analysis with your learned indicator or leading or lagging indicator, whatever it may be your choice, like it is RSI, MACD, anything like that, and decide your stop loss points per trade. For example, I can't tell you what you are doing in your own trading system, but I can explain you what I do regularly in my trading system. Okay, decide your stop loss points per trade. That means I trade for 40 points stop loss in Bank Nifty and 20 points in Nifty. I simultaneously check Nifty and Bank Nifty. Those who watch my videos will know about this. I do not take any isolated indice only at a time. I just see the big picture of Nifty and Bank Nifty and overall global sentiment, and I will take the trade. Okay. For example, when my stop loss triggers with 40 points in the spot chart, I am going to get only 500 rupees for one lot. That means if I trade 10 lots, I will get 5000 rupees in a loss, and at the same time if I trade in Nifty with 20 points stop loss, I am going to lose 500 rupees. Sorry, I am going to lose 500 rupees in Nifty per lot. That means I am going to lose 5000 rupees for 10 lots. This is my strategy, and you have to have a strategy. Without having a strategy, you cannot achieve great heights in this field. So now you know that my stop loss points are 40 points in Bank Nifty and 20 points in Nifty. This is my stop loss triggering area. So now decide your lot size. If stop loss points of 40 points and 20 points in Nifty. Okay, decide your lot size. Don't confuse with these statements. I will explain very clearly in this video. Okay, now you have decided your stop loss. You have done your pre-market analysis, decided your stop loss points, and you are waiting to take the trade as per your pre-market analysis. Now you have to position size here. Wait until price comes to your location. Okay, as per your pre-market analysis. If price comes to your location, observe the candlestick setup. This is an important area where you have to give your 100% focus here, because when you do your pre-market analysis with a system like CPR pivot points, RSI, MACD, like any other system setup, you have to be prepared to take the trade once the candlesticks gave you the final confirmation. Candlestick setups are nothing but these are the setups where the market is giving you that the move is going to happen. You can enter here. You have to think like this. You can enter here after the close of this candle. So this is called candlestick setup. You have to know about some candlestick setups that are really high probable, and if you mix your setup with candlestick setups, this is the final confirmation. Now next thing you have to do is, finally if candlestick setup confirmed your entry, then calculate the stop loss points. I am going to take you to my charts, because explaining such things orally is not enough. I have to explain them in the charts. Okay, now I am here that the pre-market analysis shows that if at all the price stays above this green line, I am going to take the trade once a bullish pin bar or a Maribozu candle like green fat candle arrives here. So once the close of this candle, immediately within microseconds I have to calculate the stop loss points from the spot chart. As I am using the spot chart every single day, I use this and put my stop loss according to it. For example, the close of this green candle is at 18,304. You can see here in the charts, this is the place where, and you have to place your stop loss somewhere here. Okay, that means 18,287. Okay, 287. Now subtract this 287 and 304. What is the resulted what is the resultant points? Okay, 287, give it some room, 285, that means in 350 points over there, and 304 4 points over there. Completely you are going to get around 20 points here. You are having 20 points stop loss here. Okay, so it matches your pre-market analysis and your lot and your stop loss points. Now you have to decide the lot size here. Now it is having a resistance here, so I am not sure about completely sure about what is going to happen. So I reduce my lot size of 10 lots to 5 lots here. For example, I have entered here and placed my stop loss with 20 points here, placed my stop loss here, and the stop loss triggers here. No problem. Now your loss is minimum on this day. Your pre-market analysis doesn't supported the live market. Leave it to the market, respect the market, and trade another day, trade tomorrow, because there is always a tomorrow in the markets. So don't indulge yourself in losing trades and take it personally. This is a business like any other business. You have to treat it as a business, nothing like that, nothing emotional, nothing fearful or greedy. Okay, now your candlestick setup has confirmed, right? Your candlestick setup has confirmed here. This is a bullish pin bar and you have entered. On this day your stop loss triggers, but sometimes if the market is so bullish, it could pierce any strong resistances and go up like this. I have felt like this is going to be that day, but unfortunately stop loss triggers if I enter here, because I don't enter at such areas. If I enter here, my stop loss triggers. Okay, and what is the next point here? I have calculated the stop loss, and sometimes the stop loss triggers, sometimes your target triggers. The point here is position sizing again, and with Bank Nifty, my stop loss in spot chart is 40 points and the lot size is 10 points. If at all the stop loss points after I calculated below 40 points, I will go with 10 lots. Okay, if the stop loss points are above 40 to 60 points, I will go with 5 lots, because only one thing you can control is your stop loss in the markets. Nothing you can control. The only one thing you can control is the stop loss. So if you are in a good risk management and controlling your losses and getting your profits in a month with 1:2 risk reward is more than enough. Okay, in Nifty also, if the stop loss is 20 points, I will trade with 10 lots. If the stop loss is 20 to 40 points, I will trade with 5 lots. This is my strategy, and you can use this sort of thinking and this sort of strategies and implement in your own strategies. Okay, and Bank Nifty spot chart. Okay, now I'm going to show you the losses you are going to get, because anybody can calculate the profits. The one thing you can control is the losses. So you have, once you are comfortable with your losses, you can make your trading very peaceful. There is a little strategy in this. Please do watch this video till the end, so you can implement this in your own trading style. Okay, now the stop loss points 40 points when I calculated after the candlestick setup confirmation, and my lot size is 10 lots. If I get 500 rupees per lot, my overall loss is 5,000 rupees. For example, this is not a losing trade, this is a winning trade. That means I aim for 1:2 risk reward every single day according to the context. So this is the 1% I am losing. If this particular trade is a profitable trade, I will going to get 10,000 rupees as a profit. Okay, I am going to get 10,000 rupees as a profit. Now if you see the same thing in Bank Nifty also, when the stop loss points are 40 to 60, that means your expected stop loss is becoming increasing. So you put your lots down to half of the lot size. Then you may have a doubt that why not I can decrease the lot size to 7 or 8. You can do that as your wish, but during live market you are going to have lots of pressure while taking the trade, because you have to check your confirmation, you have to do your stop loss point analysis, checking it, and you have to enter the market within time. This is the most important aspect of day trading. So if you are doing with 7 or 8 randomly, you may have missed the opportunity. For simplification purpose, you have to do this. Always think like this. Don't calculate your profits, calculate your losses. What if I lost this trade? What if I get at the end of the month if all the trades are losing trades? Once you make your mind like this, you will be in peace while trading, because this is an uncertainty game, which people are seeing the certainty in the markets. Markets are really so uncertain. When you feel comfortable with the uncertainty and make a strategy to make money out of it, is your success mantra here. Now let's go to Nifty also. Now this is the 20 point stop loss. When the stop loss is below 20 points, I will go with 10 lots. If at all that is a losing trade, I am going to make 5,000 rupees loss. For example, this is a winning trade, I am going to get 10,000 rupees. This is, remember this point, once you have entered your trade without getting 1:2 risk reward, please don't exit your trade, because not every single day we are getting profitable trades. Once you are in profits, make sure that you will get at least 1:2 risk reward, nothing less than that. If you take 1.5 near to 2%, the winning rate will be down at the end of the month. So you have to take at least 2 or 2.5 or 3 according to the market situation. Okay, this is the place where 20 to 30 point stop loss, above 20 point stop loss, my lot size would be 5 lots, and this is the loss I have incurred here. Okay, I hope you understand all such things. Once I want to clear an important topic of position sizing. If you don't understand what I am saying, I sincerely request you to go and watch the video once again. Once you understand this concept, you will be implementing this in your trading, because this is not this position sizing concept is not my own concept. I have read so many books, implemented in the live market, made some losses, made some profits, and I am here with some good experience and good amount of time in the markets. Okay, please consider this. You have to watch it rigorously, or you may forget this to implement your trading system. Now, risk management and its psychology. Risk management is nothing but position sizing. What if I lose? Because any given trade with 100 good setups, considering 100 good setups, could go wrong in the markets. So always keep this in mind. You have to cut your losing trades and run your profitable trades. So this is called risk management, and risk management has its psychology. Do this, that means position sizing, do position sizing to make peace with your trading loss. Once you are comfortable with your losses, you are applying the right things in the right time in the markets. Okay, now I'm going to tell you about the mindset. My mindset is like this. I take trades majorly in Bank Nifty because it gives some comfortable to trade in Bank Nifty, because there is lots of liquidity over there in Bank Nifty. So I have a system of CPR pivot points, and I trade with 3 bullish and bearish areas to take the trades. If it is the uptrend, I'm going to have 3 bullish areas where I have act on those areas only. Otherwise I will not going to take any random trades over there. If it is a downtrend, I am going to have 3 bearish areas to take the trade. This is my setup, and I am not saying that this is my I have created this setup, but I have read some books like Pivot Boss, Trading in the Zone, how to day trade for a living, like that. I have read so many books, and I have implemented all such important concepts in my day trading and implemented a setup here. If you want to learn about my setup, you can attend my webinar, and I'm going to give my contact email address in the description box, so that you can approach me to take training for me. Okay, I do my pre-market analysis according to the system. Waits until price comes to my location and takes the trade. I don't feel all the price changes over there in the chart, and I don't feel like I am moving the markets, because if you feel like every price movement is affecting you, you are in the wrong track. No price movement should affect you until or unless the price comes to your location. This is the #1 rule. Okay, don't feel all the price changes that is occurring on the charts every single day. That is not your business here. You are here to trade the indices or stocks whenever the price comes to your location only. Now here comes the main part in trading psychology. Like, I think like this: 20 trading days in a month, and an average 20 trading days will be there. With the CPR pivot points, for one lot 40 points stop loss in Bank Nifty. If at all on those 20 days I made some loss, that means for a well structured setup it is not possible to give you losses 20 days, but to simplification purpose I am telling you, to make peace with your losses, I am telling you this concept. For 20 days you are going to lose 40 points in Bank Nifty, assuming that one trade per day. I take one trade per day. I don't take 2, 3 or 4 trades every single day. This because I changed the setups according to my psychology. As per my psychology, I only trade one trade. Whether it is a loss or a profit, I just get out of the system and do some other work, like making videos, reading some new stuff, like that. And if at all the 20 trading days in Bank Nifty you are getting the losses, that means 20 into 500, that means every single day per lot you are getting the loss with 10,000 rupees loss after the month. Okay, if you are able to manage this loss, this 10,000 rupees, if you are willing to give it to the market, then you are in the right track. because once you know that the maximum loss I can bear at the end of the month is 10,000 rupees, and you should bear this, because trading is a business. Whenever you are doing a business like opening a restaurant, or opening a brand new mall, a mart, or anything else, you have to give rents, current bill, and you have to give some discounts to them. You have to hire some staff over there, and there are some problems over there, and you are not sure about at the end of the month that business will give you surely the profits. You have to do whatever you can every single day, every single minute. Okay, trading is nothing but a business. You have to think like this is a business. I have to give something to get something. Okay, as a proved back tested system doesn't give losses for 20 trading days, but assume like this: if you are comfortable to give 10,000 rupees with a strong setup, you can make money. Okay, think 10,000 as your investment for first 1 month, because you are competing with the world's most fastest professional traders over there. Don't think like just coming over here and putting your hard-earned money here and making money from those small amount. There is nothing like this. This is a lucrative professional area. You have to give your 100% effort by reading books, attending some seminars, get trained, and do your whatever you can to this profession. It's nothing different like a doctor or a engineer or an IAS aspirant like this. This is more than those, not like more than, this is equal to those professions, because you need to give such amount of energy, time, money to this profession. Think for 6 months you are getting the losses. This is the investment. Think this as your investment, and trade the markets with that capital only. That means your capital is 5 lakh. Trade with that capital only. After you double your capital, only you can increase your lot size. Okay, you cannot increase your lot size once you see the profits for 2 or 3 days. Once you double your capital, then only increase your position sizing. Okay, maintain trading journal. Keep reading what your mistakes are, because you are doing a mistake on this day and you ignore the mistake and doing same mistakes every single day. Remember that years will go on, but you cannot make money. Once you understood that the trading journal is like a accounts book for any business. If you don't have accounts book for your businesses, for your inputs and outputs, that means in case of a restaurant opening or you are a financier, if you don't write down your given amount or taken amount, you may forget about there is a chance of you may forget about the date of the amount given and the received amount given. There may be a clash. Okay, you have to maintain records. That record in trading words called trading journal. Okay, you have to journal your trades, write down your mistakes, rectify them in the next week. This video may be so boring, but this is the fact to make money in the markets. Okay, like in life, in markets also you have to give something to get some value, that is your patience, stop loss, hours and hours of chart reading, book reading. This is the most important concept here to learn. If you are in a mode that day trading is so easy, stock market trading is so easy and I can make money here like this, no, nothing like that. If you can make money with luck also, in the next month all your money may gone. And once you are accustomed yourself with a system, with a sense of approach and with some rules, and doing same setups for a good amount of time, and understanding the global sentiments, and what is SGX Nifty. SGX Nifty is showing more impact on our Indian indices like Nifty and Bank Nifty. If at all SGX Nifty is showing a bearish sentiment, our indices could also show bearish sentiment. So keep this in your mind. There is a lot more to learn, and if you see the big picture, you came to know that this is a beautiful profession, that you could make money here and you could make your living over here. Not only make your living, you can make fortune out of this field, because you are investing the same resources like Wi-Fi, your reading skills, your different sort of investments, but you are gaining that hard work, and you can implement that hard work with lots and lots of good stuff over here. Your strategy for making 1000 rupees is same like you're making 1 lakh rupees. Okay, you have to act upon at the right time, right location. And if you are making 10,000 rupees per month with a system, trust me, you can make 1 lakh rupees with that same system, following the same rules. That is the beauty of day trading. So hope you understand what I am saying. If at all you are having any doubts, please ask me in the comment section. I am very glad to clarify your doubts, because this is a great platform to teach novices. If you find any value in my content, I will be very grateful. And I am also learning to explain you. I am also learning new books, because whenever you are asking a new way of point in the comment section, I just think of it and read about it, and I will clarify your doubts. If you like my content, please share this in your community. And if you want to learn about my system, you can attend my webinar, which is conducting on Saturdays and Sundays, and you can also grow with me. Thanks for watching my videos.